Hello everyone. Today, I want to walk you through a recent trade I took based on the Consumer Price Index, CPI data. I'll be showing you a live account to provide transparency and proof of the trade. This account had a balance of $90,000, and I went in with full margin, using HM Markets as my broker. Initially, my expectation was that CPI would drive the market higher. However, the market moved in the opposite direction initially. At one point, I was down $40,000. My target was around 24 to 26 points, but the market didn't reach that level. Instead, we saw a series of 3 spikes. The previous CPI report caused a spike, followed by the non-farm payroll, NFP report, and then the CPI data. While some might interpret this as a sell signal, it went through periods where it seemed to be moving lower, which was contrary to my expectation. The market experienced a sharp drop that hit the stop-loss levels of buyers, and then in a span of just 10 seconds, it reversed and moved higher, reaching around 25.23 or 25.24. This movement affected both buyers and sellers, making it difficult to exit the trade profitably if you were using full margin. Despite these fluctuations, I decided to hold the position. At one point, I was up $25,000, but I chose not to close the trade because I anticipated further gains. My approach was to trade with the mindset of making more than I was willing to lose. In this case, a $6,000 profit wouldn't have been satisfactory given the level of risk involved. It's crucial to approach such trades with a clear strategy and the understanding that trading based on news events can be volatile and unpredictable. Always consider the market forecast and how it compares to actual results. For instance, despite expectations of a positive impact on gold from the CPI data, the actual result was worse than anticipated, leading to a drop in gold prices. In summary, while this trade was intense and risky, it was an example of using a high-risk strategy based on news events. It's not a method I recommend for everyday trading, but understanding how to manage such situations can be crucial for those who choose to engage in similar high-risk trades. Initially, I had been monitoring the market, waiting for it to break the 2,510 mark. This level was crucial for the market to gain upward momentum. Once it breached this level, it surged briefly before experiencing a significant downturn. At this point, I paused my recording to update my trading group and evaluate our next steps. Despite the initial breakout, the market began to Despite the initial breakout, the market began to fall sharply. This was a critical moment when I had to decide whether to book profits or continue holding. I opted to hold, as closing the trade at this point would have resulted in a considerable loss for the group, which I wanted to avoid. I advised the group to remain patient, even as many members questioned whether to hold or exit the position. During this period, the market exhibited volatility, fluctuating between gains and losses. At one stage, I saw profits of $26,000, which then dropped to a negative $14,000. Quite a substantial swing. The market moved sideways for a while, and I captured a screenshot to update my group on the trade status. This experience highlighted the risks involved in trading. It felt akin to gambling at times, especially with such rapid fluctuations. The market's behavior was influenced by CPI volume, and the lack of significant movement made it challenging to navigate. Ultimately, I chose to hold the position. After some time, the trade reached a profit of $58,000, which I decided to lock in. This decision was made after careful consideration of the market's performance and advice from my girlfriend, who suggested I secure the profits and enjoy the day. As the market continued to climb, and me, who already made $58,000 in profits, I decided to send a signal to the group to sell at the 2,516 mark. Despite this, the market continued to rise and would have eventually reached $100,000 in profits had I held longer. However, I was satisfied with my gains and chose to exit the trade. In summary, this trade demonstrated the importance of patience, strategic decision-making, and managing risk. While the potential for higher profits was there, I opted to close the trade and secure substantial gains. I do not recommend this style of trading unless you are prepared for significant risk, as such volatility can dramatically impact your account. If you found this analysis helpful, please subscribe to the channel, like the video, and comment on what topics you'd like me to cover next.